Just to kind of, preface what we're going to be talking tonight about, for anybody, because this is going to go up on YouTube and people will watch it. For the hot seaters, we've been doing a boot camp where we trade with them 3 days in the morning right before we trade with the entire community, and I really just kind of do a deep dive into what that hot seater needs at the time, right? And first day is kind of like an exploratory. So if you don't really know, Duke did a really good explanation last week of what the boot camp is, and I think it's a really great way for me to also check in and see where you're at as a trader, and I'm really enjoying this process of just kind of checking in and seeing where Brandon was at last week, and where I get to just watch him trade and then really just trade with him for 3 days in a row, and um and then I really do subscribe to the theory of, you see it, do it, and then you teach it. And so I asked them to follow up, and then the week later, with all the things that they've kind of their takeaways from going through that boot camp. So Brandon is doing that tonight. It's his turn. He's up. He's at bat. And just kind of going through some of his aha moments, and trading. If you haven't traded for any length of time, trading is honestly built from aha moments. And Brandon's had a lot. He's had a lot of aha moments in his trading journey, and I've been a part of that. And I've been very blessed and thankful to be a part of his aha moments. And I don't mean that in jest. I mean that it's just a culmination of aha moments to become a professional trader. And I'm happy to be on that journey with Brandon, where I've seen him grow from brand new trader to where he is today. And you never ever ever stop having aha moments and figuring out the market, and that's what makes it fun, in my belief, and challenging is the challenge and furthering your education. So with that, Brandon, take it away. I love your title. I absolutely love your title.
Well, hopefully, it gets people's attention. So just a quick background on me. I have been trading for right now almost 2 years, probably. I started with Trade the Fund a little after it was established, started with the apiary. Um, I formerly was a Series 7 rep, so I've sold securities in the past. I've worked with investors. More recently, it's been about a decade ago, I was director of investor relations for an oil company. Um, and I was direct report to 500 investors. What that meant was 500 people who had invested in the company had my cell phone number. So that was a joyous thing to behold. Also been the co-manager of a very large fund. I did most of the back end work. I didn't do the trading. We had a specific trader that was he himself responsible for the majority of the failures that occurred in 2008 with securities companies, just because everybody was betting on him because he was the best. But fortunately, we got out without losing people money, and that was a good thing. So I put this together because, as David said, and Rob and I'm currently in California, but I put this together, as David said, because of basically some aha moments. So I have had some very good successes as a trader. I have had some abysmal failures. And I have had very large failures recently, where I just didn't catch something, and I trade typically gold. That's what I've been trading the last few months. I got out of gold, went back to the euro, and then stepped back out of the euro and went back to gold when things just seemed like they weren't moving fast enough. That's not necessary to make money. It's a matter of proper position sizing and working in the right market, but I chose to go to gold. Um, so we're going to go over some things that hopefully by the time that you finish this tonight, you'll have a better idea on how you can avoid experiencing large losses in your accounts. Um, get, All right, rhetorical question, and David will be dolling anyone that responds to this in chat. How many of you have struggled with large losses? How many of you had that happen recently? This is just for you to think about. This whole set of slides is greatly focused on your psychology. It's designed to make you think. And I hope that
Hey,
you'll be
Brandon.
able to take some things away.
It's like I don't
Ah.
struggle. It's easy to blow accounts.
Well, Duke, um, I understand that, but the goal is to not do that, I think, if you want to have investor money. Um, but how many of you have been frustrated to the point that you feel like giving up or that you'll never learn? How many of you have had a large loss in an account, say in the last 30 to 90 days? You know, that and I know everybody's thinking about that and that's going through their head and it can make you feel bad. It can make you feel anxious. It can make you feel depressed, concerned, wonder if you're ever going to get it, have doubt in your skills. But there is hope. There is you know, doesn't mean that it's going to be great and you'll be able to run off into the sunset with all the cash. It'd be great if we could just avoid losses, but we can't. Losses are a part of trading. What we want to do is reduce losses and, you know, lessen their damage to the account. How many are too stubborn to admit it? Yeah. So there's a secret that we're going to be talking about. We're all after whether it's gold or whether it's cash, but sometimes we trade for the wrong goal. And I'm going to use a lot of personal experience in this because that's what I know. Uh, we have had this leaderboard, which I wasn't super enthralled with to begin with, but decided to start posting to it anyway. And it just so happened that my numbers on the leaderboard for all time were the highest on the leaderboard. That became important to me. Probably wasn't important to anyone else, and probably no one else even knew, but it became important to me. And the reason it became important to me is because I'm really big on having a 10x mentality and and 10xing things is easier than 2xing things in my view. And that is very much true in trading, but it's also very easy to go the other way. And so with regard to having the wrong goal, my goal was to post the maximum I could to that leaderboard so that I not necessarily the absolute maximum. I didn't necessarily trade really small accounts and try and produce gigantic numbers. I just consistently tried to overproduce. And that is not necessarily a good goal. In fact, I'll just come out and say it, it's not a good goal. And that was the wrong goal to have. It was, in fact, entirely the wrong goal to have because it made me focused entirely on the dollars. Now, I am, as David often mentions, I am focused on the dollars. I live in a place where you have to make $60 an hour to own a basic apartment, not to own, to rent a basic apartment just to live in. This is one of the most expensive places to live in the world. And we've chosen to live here. I've got to produce. I have a dollar gaining mentality. But if we trade for the dollars or toward the percent, instead of trading correctly or trading well, that can help us produce the wrong results. In my case, it makes me so focused on getting that number that it's that number at the expense of anything else, which means that my drawdowns are huge sometimes. It means that I make mistakes and just decide, you know what, I'm just going to lump a whole bunch on here. Oh shoot, that didn't go well. Well, the next one I'll lump a bunch more on. And so it's get that goal at any cost. And that is not the best way to be a trader. And I'll tell you from experience with working with other people's money, that is not what an investor is expecting. They expect quite the opposite. They expect you to trade as if it's the most precious thing in the world that you have their money. But if we trade well and we follow a successful system, the rest of it takes care of itself. So what do? The secret is process. Simply stated, follow the rules. I don't know if you guys are going to be able to see this or not, or hear this. Did you guys hear that?
No, I can't hear it.
Okay.
I
The
think you
code
have
is
to-
more guidelines than actual rules, is what it says. And the thing is, I have operated without hard rules from the very beginning. And while I have documented some things and I have reviewed some things, I don't keep it top of mind. Because I don't keep it top of mind, I break rules. They're not even rules. I break guidelines all the time. The only way to fix that is to know what the rules are. And the only way to follow those rules is to make them. But it is easier said than done. Now, we can't follow the rules if we don't know what the rules are. And sometimes it seems like the rules change. And that's why they need to be defined well. We have a process that we use on a daily basis in a certain time frame with a certain instrument, and that works very well. But within that time period, there are a lot of things that can happen, and there are a lot of things that we need to bring to the table to be able to effectively trade that time period and that instrument. Now, the good news is that stuff also transfers to other time frames and other instruments, but we need to be in a state that we know exactly what we're doing. We know exactly what our intention are. We know, we know where the lines are, and yeah, guardrails. That's right. That's really the bottom line. And so now what you've all been waiting for. Next week, we're going to discuss. Okay, that was meant to be funny. I'm not a comedian. So number one,
you gotta bring your own laughter. Your laughter.
yeah,
Cue
I've
the
got to
laugh
bring
track.
my own laughter. Number one, you got to be ready to trade. So your mental state has got to be good. Whatever you think about yourself, and some of you have interacted with me a little bit and know how strongly I feel about that. Whatever you say about yourself is what's true. And you need to watch what you say. The little picture of the kitten looking in the mirror and looking at the lion, that needs to be your view when you come to the market. You're coming to the market and you're up against forces that you do not stand a chance against. You as an individual trader, you don't stand a chance. But you can position yourself to be able to take advantage of what's happening, even though you don't stand a chance as a formidable competitor in the market. So you need to have that degree of confidence. Sleep, as I've mentioned a number of times recently, and that's one of the reasons for my frequent absences, sleep is absolutely critical. A lack of sleep will create mental instability. And that mental instability can be worse than drinking alcohol. When you're trading, you've got to have every edge possible. You need to be at your absolute best. I watched a video probably a year ago of a guy that's a commodity trader, and he was being interviewed by someone that just happened to show up at the airport and was interviewing people that were going into their private planes. And he just said, "Hey, can I interview you?" And the guy's like, "Yeah, no, I don't have time." And then he stopped halfway through the gate, backed up, and he said, "Get in." So he gets in, goes and sits on this guy's private plane, and the guy proceeds to tell him how he makes his living. He's a trader, and how important his mental state is. He has a masseuse come in every single day and give him massages. He goes to a chiropractor multiple times per week to make sure that he is in physical shape. He works out, he exercises, he takes care of his diet, he maintains fitness. That's what it takes if you really want to succeed in this game. Now,
That's what
does
I'm
that mean
missing.
that you, pardon me?
I said, that's what I'm missing. That's exactly what I'm missing. I
There,
need to,
it's possible to do well or at least okay in this by not doing that. But if you want to be a top performer, you have to act like a top performer. That's really the bottom line. Uh, just as an example, there are a number of traders with SMB Capital, and I'm not promoting SMB Capital. It just happens to be one of the large prominent hedge funds in the U.S. and prop trading firms. There are traders there that make multiple millions of dollars per year. They do that because they are at the top of their game and they maintain that position with great effort. It takes a great deal of effort. That doesn't mean that every one of you has to be this level of trader. You don't. But I'm just saying that if you don't get sleep and if you don't have a good mental state, it's likely to lead to issues. Emotional stability, having an argument, a disagreement, being disappointed, hungover, thinking it'll be just fine. That's probably not going to be the case if if you come in to trade and you're not in a good mental state, prepare yourself to be in a bad position because that's very likely, unless you happen to just be lucky, uh, that is maybe not going to be the case. If you've had a major loss, if you haven't taken time to review that loss, and if you don't have any rules with which you can evaluate that loss and determine whether it was the market's fault, whether it was your fault, if you made a mistake, if you did what you were supposed to do, but regardless of the outcome, a loss does not necessarily mean that you're a bad trader. A loss can be a perfectly good trade as long as you followed your rules and your rules are sound. That's why David keeps saying, don't let one single incident create a situation where you feel like you're going to change your trading because of one day's incident. If you made a mistake, that's a different story. If you know you did something wrong, that's a different story. But if it's a rogue wave that comes into the trading day, that is not necessarily your fault, and you need to evaluate it as such. But without any baseline, you don't know how to evaluate yourself. If you're not ready, don't trade. It's real simple. I frequently will step back from trading if I don't feel like I'm with the market, if I'm not seeing the opportunities, if I'm not feeling like I'm in sync with it. I don't have a problem walking away and, going and getting another cup of coffee or having a snack or something and maybe walking outside, coming back. Because when you do that, you come back and you can have a different perspective. And sometimes that's all it takes is just a few minutes. All right. Question is, do you have a playbook? The SMB Capital Group is very, very focused on having a playbook. And we talk occasionally about having trades documented, having a method documented, but you've got to have some kind of an outline on, you should start with a basic outline of what your typical trade or your normal or your best trade would look like. Because without that, you don't have a way to evaluate where you're at with a trade. So if you don't have a playbook, it's basically just Vegas. You're throwing money at it and hoping you win. David talks about having 3 high probability trades. So up on the left on the top, you've got your high probability trade number 1, high probability 2, high probability 3, scalping, news. There's build, fades, overnights. Those are all different methods that we use to create a trade set. Each of those needs to be documented in how you do it. And that goes from, how you recognize your entry, how you position yourself as far as trade size, what your exit is, what plan A and plan B looks like, what plan C would look like. Line all of that out in a document and then look at it frequently. I've done this with a number of setups, and yet I have not looked at it for months on end. And every once in a while I'll go, oh shoot, I should really take a look at that. But then I don't keep it prominent. Now, right now I have a folder on my desktop with my playbook, and my goal is to look at that with regularity. Ideally, I'd like to look at it on a daily basis to keep that top of mind. Doesn't mean that it's necessarily going to happen that way to begin with, but that's what they do at SMB Capital is they actually have their people review. They video all of their trading. They have their people review trading each day and how did they trade? What did they do? And then evaluate their trades based upon their playbook at the end of the day. And that's not a bad idea. It's a lot of work, but it's probably well worth it. Okay. Reevaluate the market for every trade. This is a radical departure from the typical way that we trade. And this is something I traded in front of everybody yesterday, and I failed at this rule because I did not reevaluate every trade. But this is something that I'm working toward adopting as a primary way of trading to evaluate every time before I start a trade set. Because by doing that, you remind yourself where the KPIs are. You remind yourself where the support levels are. It only takes a minute for you to do that. The more you do it, the faster you'll get at it. Soon it'll just take a few seconds for you to do it. So it's a quick and easy way to keep yourself knowing that you're in the right direction. If you don't do this, then you enter the market in the wrong direction. You go, oh shoot, I'm in the wrong direction. And would it be perhaps possible for you to have recognized that a few moments before just by re-looking at the market again? And I would argue that, yeah, it probably is very likely. Check for news. That's something that, I'll often be so focused on trading. I'll look at news first thing before I start trading, but 45 minutes later, I've forgotten that there's news in 52 minutes. And 52 minutes happens, and then I'm caught in some move that I wasn't expecting. It's not enough to just check once before you begin trading to see if there's news. And what are the sticky notes for? I'm not sure. Oh, sticky notes on your monitor. That's I actually have something I'm going to give you guys I'm going to actually give you guys something that I have taped to my monitor on a half-page sheet that is printed out that has some of this on it that is there in very large letters as a reminder to remind me to do these things. Because you're right, Ed, you got to have it in front of you. And the bigger and more bold, in my case, the better. Perhaps some of you can get by with a little sticky note, but I need neon. All right. Waiting for a pullback. If you don't wait 50% for a pullback, statistically in my book, I can tell you that 70 to 80% of my first or early trades end up as a loss. And that is like bona fide statistics. That's just plain stupid. There's no other word for it. Doing that and eroding your profitability is foolish. And I did that yesterday, and David brought it up, and he was absolutely right. Regardless of my intent, I was trying to do a short scalp, but I had a bad entry, and it was a bad move. And I'm fortunate I was able to get out of it okay, but oftentimes it's not the case. And, so David suggests entering one trade at the 50 and one trade or two trades at the 100. And if you don't, again, you've got to have a baseline. You've got to have a system that you follow. If you don't do that and you just lump some on here and lump some on there, that's worse than Josh's willy-nilly trading. That's like positioning yourself for a big loss at some point. So you end up entering too heavy too early. And I'm sure none of us have ever experienced that. Duke, you've never done that, right? um, so just say no. No entry until 50%. If you stick with that, it'll reduce the probability of your having a loss. Get the resources that you need to be a better trader. So there's tons of opportunity, tons of sources for you to get materials to do better as a trader. If you don't do that, it's not enough to just show up in the morning to trade. You've got to be willing to invest in yourself, and that means invest time, that means invest money, that means invest your effort into becoming a better trader. Now, I do a lot of audiobooks. I've got a huge Audible library, and I listen to the same book oftentimes 4, 5, 6 times because that's what it takes to get it through to me. But we've also got sources such as Trade the Funds training. There are some of the training that's available to all of you. There's some of it that's you're only able to access as you get to higher levels. And there's some that he actually, in fact, I don't know if it's still that way, but it used to be that you couldn't get to the next course until you finished the previous one, which is not a bad idea. That way you've got the foundations correct before you go on to something that you might not be fully understanding. Be willing to ask questions on Discord. You may not always get the answers that you want on Discord, but that's not necessarily a bad thing. Even if you get an answer that's counter to what you believe, that can either make you question and make you determine whether or not what you believe is correct, or it can further entrench you in knowing that you're correct. So don't be afraid to ask questions on Discord. That's what it's there for. And YouTube. YouTube's a great source for learning. You do have to be careful about who you listen to on YouTube, but there's tons of good material on YouTube. And if you have a question, not a bad idea to just throw it on Discord and say, hey, do you guys, anybody know anything about this guy? All right. This is number 6. Bonus content, revenge trading. As a leading expert, pardon me, go ahead.
I said, I know how to do that.
Do you now? Well, as a leading expert, revenge trading is defined as the clear, unadulterated intention and execution of getting back what the market has taken from the trader. I'm here to tell you that it is not a good way to trade. It is not statistically positive. Okay, my statistics, 30 to 40% of the time, it ends up in an amplified loss. And by amplified, I'm talking you go from 1 or 2% to tens of percents. We're not talking, I'm not talking getting back 1/4%. You should be able to get back 1/4%. If you lose 1/4%, you should be able to, if you're not able to hone your skills until you are able to, you should be able to get that back in a session. There's typically, if you got on the wrong side of a move, or if you're in a bigger move and you know that you're in the wrong side and you pull the plug, if you get back in and either follow through with a momentum or you wait until the turn and get back in, you can usually make a small amount back. So that's not revenge trading. That's just realizing where you're at, realizing you were in the wrong position and getting back in and getting corrected. But what I'm talking about is where you have a big loss, 3/4, 1, 2, 3, 4, 5%, and you go, I am getting this back now. Now, personally, I have made back an 18% loss in a day. And I actually think I think that may have been the day that I ended up with 36% total, adding up all the accounts. But an 18% loss in a day. And David has gained back a 50% loss in a day. But that is not the way that he would choose to trade. That is
You know,
not what
2
an
days,
investor.
2 days.
2 days. Okay. 2 days. But then you got a chunk of it back the first day. I know that.
I
But
did.
the point is that is not an effective way to trade. That is
Nope.
not what investors are going to allow you to do with their money. And if you do that at Darwin X, you're going to be done. So you may get investors, but if you pull that kind of crap, you're losing those investors as soon as they can get out, and you will never get investors again because your stats will show that, and people will just go, yeah, no, not this guy. Remember that your stats are public. Remember that people are concerned about their money. They want minimal drawdown. They want good returns. It doesn't have to be phenomenal returns. They want good returns. So, all right. So entering deciding that you're going to get heavy and make something back, how heavy you're going to be if you do that in 10 or 15, 30 minutes. Statistically, how does that end for you? You probably can answer that question. So just say no. Trade is a normal way. Trade the way that you trade every day and continue to do the same thing, follow the same process instead of revenge trading. And I will tell you that because I've tested this recently, getting like a quarter or a half% loss, realizing I'm in the wrong direction, focusing on just trading well and taking advantage of every opportunity, you will be surprised at how quickly you can make that back. Will you make it all back in one day? Maybe not. But you can take a bite out of that, a big bite, just by being smart. When you have a loss and you realize you messed up or realize that the market has just done something that you weren't expecting, back off, take a minute, reevaluate, and then get back in the market if it makes sense, unless you're emotionally at a state that you're not comfortable and you're not feeling like it's gonna turn out well. If you're in that state, hold off, don't get back in. But if you're in a state where you're like, yeah, that wasn't great, let me figure out how to get that back. That's a good way to re-enter the market, and that's something that you can do and be surprised at how quickly you'll get those returns back. But yeah, do not change your position size or your trading style. It's a futile way to trade. So your challenge, fully document one of your 3 high probability trades, either right now or immediately after taking one in the next 24 hours. So in the next 24 hours, I challenge all of you to take one trade type that you take on a regular basis and document it. Document it as much as you can. Document your entry, your exit, document everything. And yep, homework. So do one, just do one. Anybody can do one. Doing all of them might seem a little bit ominous and a little bit too much, but you can do one. And
We shouldn't
if
call it homework though. People don't do homework. Challenge. Call
it
it
is a challenge. Yeah. So if you don't have one, if you don't have a high probability trade, then you better look and start asking what is one? Because when David told me early on that I needed to have 3 high probability trades, I had absolutely zero idea of what a high probability trade was. I knew nothing. It was in our first hot seat session, first or second, and he said, "Hey, you need to go figure out your high probability trades and write them down." And I'm like, "Yeah, okay, yeah, I'll do that." And what I did is I bought a book on high probability trades, and I've gone through some of that book, and it does have some good ideas, but it's not uh, necessarily the epitome of what we do on a regular basis. So it tends to be a little bit more complex. But this document one of your high probability trades in either today, right now after you're done here, or in the next 24 hours, right after you do it. If you do it right after you do it, it'll be all fresh in your mind and it'll be a lot easier. So
Could I
that is
clarify
pretty
something?
much it. Yeah.
By high probability, you mean high probable profit. Okay, because the bad PTP is high probability for the loss.
Correct. A high probability profitable trade. Anybody have any questions?
So yeah, what are your and since you're talking about it and you know what it is, um, what's your go-to high probability trade that you love?
So I try to catch the the first pullback on a breakout.
Mhm.
I don't always catch that, but like I missed that on yesterday on the trading.
Or
But
today? You
that's
mean this
one that
morning?
was that this morning.
That was
I
this
did
morning,
trade
yeah.
this morning, did I? Oh wow.
Yeah,
Okay.
you were late, by the way. Hey,
Yeah.
did I
Okay.
mention that you were
Whatever.
late?
Did you mention I was late? Yeah. So I did miss that. Um, when I'm trading the euro dollar, the third, the actually the second and the third are pretty high probabilities. And then there is a lot of price action which I have yet to document. There's probably 4 or 5 high probability trades in trading gold that I need to line out and define because when it happens, I see it happening and I know it's happening and I know it's a good trade. And you know, and so those are some that I don't have documented, but those are the ones that I'm using on a daily basis right now, and I don't necessarily have names for them. One of them is a momentum trade, just by there's a certain way that candles will move and that price action will move, and when it's moving in that way, the probability of being able to get a huge bump in a single candle is very, very high. And so documenting that so that I'm able to recognize that. And, then once I experience it, looking back at the price action that had happened around that and being able to define, what sort of environment creates that will help me to recognize that more readily in the future. And perhaps I can even know before it's going to happen. Whether it's around particular news or events that are occurring or decisions that are being made, things like that. But it's usually when there's rather violent action, and I'm very frequently able to do very well on those, like literally like make goal in like a couple of candles. So that's one that I use on a regular basis. Um, any other questions?
Oh, it was really good. Thank you. I want to say thank you that you
So
put together a great presentation. I really think it's awesome.
I had some questions.
Yeah.
Go
You know,
ahead, Duke.
is like David was saying, how do you tame the beast? Like what helped you tame your aggressive nature in trading?
Well, I just put a link into chat, and that has a bunch of resources. So one, having things prominently listed, like the 50% pullback is something I've been working on for months. And what ends up happening is my little note, and Ed, I have used a sticky note, and my little note gets knocked off because I have to pull my laptop out to go DJing, and I come back after Sunday and it's not there, and then the next week I completely forget about it because I'm not seeing it in black marker on a sticky note. So having a reminder in front of me that's very prominent is one thing that has helped me with that. But I think, Duke, to be specific with you, I think you're talking more psychology. And you and I have talked, a fair amount about that. And some of those resources that I have given to you and that you have found on your own uh, are in that. So, having resources that help you with psychology is, in my book, really, really, you can't access the document. Ah, that stinks.
I got it.
Yeah.
Yeah, I even emailed it to myself.
Okay. Glenn, reach out to me on Discord, and I'll send anybody that can't access it. I'll get it to you on Discord. But I'm sorry, I completely got off track here.
You were talking to Duke about, well, this stuff in the document, right? Psychological trading.
Yeah, so the psychology side of trading. So it's been almost a year ago now, I recognized the importance of psychology in trading. And that became a very big part of what I spent my time on, the psychology side of things. And honestly, I probably had more psychological issues with trading than most of you do. Because I'm a strong type A person. I am a warrior. I'm focused on getting to the goal. And those things are all potentially very detrimental in trading. Not to say that you can, I mean, you may be able to do well passively in trading. You got to be really smart about it, or you can be sneaky like Josh. Hopefully Josh is here to defend himself, but I think he's a sneaky trader, and he sure does well with it. But having your psychology locked down as much as you can, and then harnessing the positive sides of your psychology and suppressing the negative aspects of your psychology are really, really important. And by suppressing, I'm not talking you handcuff things. I'm talking try to position your state of mind, try to position yourself in a state where you feed what needs to be fed, but do it in a way that's not going to be harmful to you. Like, for instance, David early on recognized that I was going for gigantic returns with a really tiny account. And he recognized that it was related to money. And I had known that, but I was kind of afraid to trade a $100,000 account because good grief, the numbers that are associated with that are like, you get a loss in a $100,000 account and you're used to trading a $5,000 or a $10,000 account. Those numbers look big. Right now I'm working on a $400,000 account, and my goal in working a larger account is so that those numbers eventually mean nothing to me. And even up to $1 million or multiple millions of dollars, that number that happens to be there staring me in the face, the negative number, has no psychological effect on me other than the fact that I figure out how to get that squared away. And so it's really about maintaining a good psychological state and creating a good psychological environment. Oh, and the way that I addressed, David asked me, he said, why don't you try trading a larger account, trade a 50K account or something like that, a demo account. And so I didn't. I went right to a $100,000 account. And I actually found it easier to trade a $100,000 account than it was for me to trade a $10,000 account. Now, some of that was due to the fact that I had increased leverage. That's a great part of it, actually. But I could see those numbers come back and it made me feel good. So how I address that now, I trade 6 accounts simultaneously. My copy trading goes across 6 accounts. They're not all gigantic accounts, but my end of the day numbers look good to me and it makes me feel good. I accomplished something, and I accomplished something that financially feeds me because I'm copy trading across 6 accounts. So does that answer your question?
I'm
Yeah.
not sure who even
Well, David
asked
asked
that
the question, actually. Yeah.
So I'm just curious, like, just you're heavy on the psychology. Have you, I'm just wondering if you've had a chance to review the 3 and 50 course. And I have like towards the end of it, I have a psychology because I put it
I have
into the
not.
course. I put it into the 3 and 50 course. There's a whole section about psychology because I honestly, one of the things and that I try to teach right out of the gate to new traders, because it's something that I personally didn't understand, um, was how much psychology goes into trading. And I kind of, um, I don't want to say in my early trading days, I'm like, nah, psychology, I didn't believe that psychology
Yeah.
was a part of trading, right? It wasn't, and
I didn't
I'm like,
either
no,
initially.
it just
Yeah.
needs to be it just needs to be a system. I just got to crack the code, right? And but now I firmly plant it into my course and my education of I go through it, and it's towards the latter part because I teach the rules and the principles, and then I spend a ton of time on psychology. I'd be really curious for you, Brandon, to go through that and give me some feedback because you're heavy on
Yeah.
that, and you're heavy on that, and let me know what you think. But at the same token, I'm kind of right there with you, where if you don't understand how much psychology can take on you and can pull on you as a trader, you're going to get beat up by it, right?
Yeah.
And you're going to suffer because of it. And I think that most people quit trading because of it, right?
Yeah. I would agree.
Because trading is a way to build confidence and then shatter it all in the same day.
Or even a few minutes. Right, Ed?
Exactly. Oops, that's my alarm saying got 10 minutes before class. I need to change that alarm. But that's the thing, is like I never thought how much psychology had to do with it, right?
Yeah.
Oftentimes I'll get asked the question from time to time, can you help me make X amount a month in trading? And my answer is absolutely. I can help you make it. It's up to you to keep it. Do you know what I mean?
Yeah.
And that is so true with trading. I can help you
Yeah.
make whatever number you want, but it's up to you to keep it, you know? And that's the hardest part. The hardest part is sometimes for some people it's stopping and and finding out how they can be consistent with trading, right?
Yeah.
Uh let's see. Any last questions, thoughts from the peanut gallery out there? Oh, let's see.
MK
3,000 to
mentioned
1
that it's mostly
leverage.
psychology now. And once you have a system, and if you document your system, it really is, I mean, psychology is the only thing left. If you have a system that works,
Mhm.
meaning a method or multiple methods of trading the market, it's really all about psychology after that. If you can handle your
Absolutely.
psychology and keep that in a box, and you've got the system, it becomes I mean, frankly, it's a money bucket, and you just reach into the
Yep.
bucket and take the money out.
Yeah, and that's what it is. It really is. If you look at it through that lens, it's hard. It's hard to get to that lens, right? But I would say, and it takes time to get there. And that's why I tell everybody it's a good 1 to 3 years of trading before you start to know the rules. And then it's a lifetime of psychology. Do you know what
Sure.
I mean?
Yeah.
And so I really appreciate you popping this off. So, other than psychology, is there anything else that you are taking away from the boot camp that we had last week?
Well,
Is there
just the
any
points
other
that I
aha
brought up,
moment?
just the
Sure.
points that I brought up in this. I mean, I really, having the discipline is important,
Hmm.
but it's not just discipline that I'm lacking. It's having something to measure against. That's why I have difficulty having discipline, because I don't have a measuring stick. My measuring stick is fabric. I adjust it anytime that I need to. It's
Sure.
not steel. A steel measuring stick you don't change, and then you can judge, did I do well, did I not do well based upon this? So I would say that, above all else, that one fact of having something to judge against is the
Sure.
biggest aha that I took out of all of that. Because,
Awesome.
I did trade decently during the boot camp, and I did okay. Um, but yet the thing that came to me was, did I really do okay? Well, I don't know if I did okay. I was profitable, but did I do okay? I don't know. What do I measure that against?
Is that rhetorical, or have you figured that
Yeah.
out?
Yeah,
Yes.
that's what I was thinking.
I'm working on that. I'm a work in progress.
Well, and I'm gonna say this to you and everybody else who's already done a boot camp. Just because you go through a boot camp doesn't mean that you're fixed. It
Oh
just
yeah.
means that I try to figure out what you need now,
Yeah, I have a
a couple months
baseline.
from, yeah, and then you build there and then you just do it again in a couple months and
I
take you
do
from
have
there.
one other thing I'll bring up. I was thinking about it this morning. So I'm very big on making tools. Um, so when I'm physically doing stuff, I do a lot of wiring, complex wiring and things like that. So for instance, I needed a tool that would take an 18 gauge wire and curl a little circle with it so that I could put a screw on it for solid core
Mhm.
wire. And there probably are tools out there that would do that for you, but I needed it now. And I was in the middle of a big project where I had hundreds and hundreds of those wires to do. So I made a tool. Now, revision one of that tool didn't work real well, but it got me through a couple of days. And after my technique became a little bit better and I had a little better idea of what I needed, I made another tool. And that tool worked a little bit better and, was a little bit more precise and was a little easier to use. Finally, probably a week later, I made the third revision. That third tool is still in my toolbox, and that's been 9 months ago. And I use it on a regular basis. Now, that third tool, the third iteration, it's still the same tool. It still has 3 pins that grab the wire in a certain way, but the angle of those pins, the height of those pins, and the handle that it's attached to versus being on a flat piece of wood is very, very different in function and how it works. And so that's that I think is what you're just saying, is that as you go through and as we go through boot camps and whatever it might be in our journey as a trader, you don't know what you're going to need at the next level. You will
Right.
know when you get there. Like right now, this is what I need at this level. Now, 6 months from now, I might need something else, and I might need the same thing, but in a different way. So, being willing and able and compliant to retooling as necessary is important in your growth as a trader.
I love it. And I love what MK caught on that is like iterations. You go through
Yeah,
multiple iterations, right? And you do that when you're trying to learn something. And like you said, the the more you do it, your technique gets better, right? And then you level up,
yeah,
right? And that's what we talk about all the time is level 1, 2, and 3, right?
yeah.
Yes, you're right, Logan. I was about to ask, but I'm not going to now. Yep, yeah, we don't ask those questions.
Especially not if it's
All
going on
right.
YouTube.
Yeah, exactly. We don't want to get banned. No, just kidding. All right. So anybody else have any last questions before we adjourn? Thank you again, Brandon. Great,
My pleasure.
great, great presentation. I just, really am curious. Like go through the 3 and 50,
I will.
the last part, and let me know if you have any takeaways on that psychology section for sure. So
Will do.
And you know, just to kind of echo Brandon's and his iterations, I've seen him go through so many iterations. The first time that we traded together, I would say it was kind of a boot camp-ish where I had him in the hot seat more frequently than I do now, as we were just kind of getting him off the, you know, ground floor or level one type stuff. Because when he came to me, he was only like a month old in trading, and that was like going through his iterations. And I remember, you know, we had you know, we lovingly joke about the smack a Brandon candle, right? And it really did come because we started out with psychology, didn't we? Because I said, you can't say those words. You can't
Sure.
talk about hindsight. And um, you've done a great job of, you know, where you been, where you were and where you are now. And we even created, you know, the Brandon hindsight jar, like the swear jar. Every time you said something that was hindsight, you got dulled, or you had to put something in the hindsight jar. And that was us trying to, you know, lovingly joke with you about, you got to fix those words. You can't say those things,
Yeah.
or you'll never be successful as a trader, right? And you've done a great job of getting from there to here. So I really appreciate, again, the opportunity I've had to see your journey blossom. I'm looking forward to the next stage of your journey, and looking forward to the next time that you do a presentation like this, and what we're going to learn from you at that point. I'm excited to see where this journey goes for sure. So
Thank you. I
thank you,
appreciate the
Brandon.
opportunity.
Thank you guys. Thank you everybody else for being here. I kind of like this time slot. I'm more awake. Uh, we can ask better questions. So I think we're gonna keep it. And just to you guys, and also if you weren't aware, Friday morning, we're changing our Friday morning class to an hour early as well. Um, just to trade an hour earlier, and we'll end an hour earlier on Friday. So I think that the trading time is better at that time frame. So we'll do that. So just to do that, right? uh, you're right, Eagle. Okay, you're right. Is that what you want me to say? So the trade changed it a long time ago. All right, guys. Thank you, and we'll see you guys in the morning. Thanks, guys. Bye.